market bottom or bull trap. So I think this is kind of interesting at this point because I think in terms of the huge rally on Friday is kind of meaningful and also significant as well. So why is that? So first of all, when I say it's meaningful or significant in a way that is not because of the magnitude of the rally for the indices, and also not for the individual stocks as well. I know there are some of the stocks like rally 10 plus percent, 20%, or even 30%, but those are mainly from the super oversold stocks. So those doesn't really count. And I will just kind of ignore that because they just like have been sold for quite some time, maybe 6 months or so, or maybe more than that, and have been dropping more than 80% of their price. So even though they probably like rallying 10, 20, 30% off the bottom, but still is just not tradable. The thing that actually caught my attention is the market breadth on Friday. So on Friday, we know that the indices are probably up by probably 2-3% for the S&P and also for the Nasdaq. Well, not too bad, but considering that is kind of in an oversold condition, 2-3% is really not that much. But if we look at the market breadth, this is the market breadth that I also show you in the previous session. This is the 52 high minus low, so there's the net high minus low. So every time, or at least in the past two times, like we saw it in the 24th of January low, that's the 24th of February low, and on the 12th of May, so that actually was a low, and I think that's subsequently we see a rally. So this sort of the negation from deeply oversold, like almost hitting like 1,600. Yeah, I think it's just over 1,600, and from minus 1,600 all the way back to minus 160. So this sort of the negation is very significant. So what does it mean? It simply means that there is not much stocks actually just create a new low. So simply put, like there are a lot of the stocks actually participating in this reversal on Friday. So I think this is kind of meaningful and very constructive for the bull, at least for the short term. So you can see that in I think the 24th of January and also 24th of February, there's a swing low form in the indices. So subsequently, we see that there's quite a negation or quite a spike or jump in terms of the market breadth. And subsequently, the indices kind of just rallying quite a lot. So it's sort of a very meaningful rally from the low, at least in the January and also the February. So would we get this sort of the rally right now? Like, could this be a significant low? And then we can see a very meaningful rally in the indices and also in the lot of the individual stocks as well. So this is the main topic that we'll explore tonight. So next is actually the price structure and also the characteristics. So in terms of this chart, maybe I will just put up the trading view. So I think it's bigger. So let's take a look here. So this is the trading view chart, and I think yeah, it's bigger here comparing to the slide. So you can see that is the same chart as the slides that I showed you just now, and I have already labeled the Wyckoff event, like the selling climax, automatic rally. So let's just quickly take a look at this structure. And I talk about the distribution many times, and also this sign of weakness plus this selling climax. And subsequently, we have the automatic rally that actually define the boundary of the trading range. So this is the 24th of the Jan. So that's a very significant swing low, and we got an automatic rally. So from here to there is very meaningful, and there's quite a lot. And this is probably 24th of Feb. So another significant swing low, but it did not really take off. In fact, well, it did. this is the rally, but subsequently there is another test. So it's kind of a complex spring, and followed by a very meaningful rally based on some kind of the causality build. So these are the two rallies that I think a lot of the people kind of very interested and just speculate whether we could have this kind of the rally from here on. So this is like another low from here. So let's just take a closer look. So in terms of the price structure, so what is this? So this is definitely oversold, right? So oversold, and if we take this as the redistribution, okay, and that is distribution, and from the distribution, when we see that the price actually break down, so it just kind of goes into a selling climax and then automatic rally. So it's very similar context in this case. So this is a redistribution structure, and we definitely get this kind of the breakdown. So the breakdown here, and could this be a selling climax? And then next is just the automatic rally like what we witnessed in January. So if that is, then we probably can expect some kind of the huge rally. Okay. However, there are 2 points that I would like to convey to you. So first of all, would this be a change of character rally like the automatic rally that we can expect like in January? Or could this simply be a relief rally? When I said a relief rally, it simply means like probably this is a relief rally, this is another relief rally, another relief rally. So that's just kind of normal within this downtrend. So this is within the down channel. So it's just still traveling within the down channel, I think beautifully. So if this is a relief rally, so that is the kind of the rally that we can expect. So this is a relief rally because every time it just goes into the oversold condition. So when I say oversold, it just means that it kind of hit the channel oversold. So I'm not sure you can see it clearly. So this is the channel. So this is a down channel. So this is the oversold of the down channel. So every time it hits the down channel, so there's a relief rally because it's kind of oversold, whether it's in a market breadth or whether it's the price itself is definitely oversold. So hit the down channel, oversold, and it just kind of bounce back up. So this is the relief rally. So is the same here. So definitely is oversold for the past 5 trading session or maybe 4 here. So 1, 2, 3, 4. So oversold and very steep move down once it's break below this 4100 level. So this is a kind of a major support level defined by this secondary test. So it just had the oversold condition, and subsequently there is a good rally. So on Friday there's a big rally up. So if we look closer, for the past 5 days, past 5 trading sessions, so here is the demand. So there's presence of the demand come in on Thursday, but it just kind of form a demand tail, and Friday is actually the confirmation. Despite there is kind of a lower volume here, I think it's quite obvious. I see that several analysts actually just pointed it out, probably saying like, well, this is sort of like not confirming. But if we just take a different perspective or different view, that the demand actually come in on Thursday. So here is all the demand and actually reflected in the demand tail as well with a slight increase of the volume. So did it go down anyway? Yeah, I think probably slightly if we look at the progress to the downside. So on Thursday, it's still kind of a black bar, kind of going down a little bit. So you can see like minus 3 points, minus 0.08%. Okay, but the progress to the downside is just so little, and definitely with the increasing of the volume to push it down, and eventually we just got no downwards results, so suggests that there is presence of the demand, and it's very obvious it as seen it in the demand tail, or they call it a hammer, and Friday is definitely the confirmation. So with the demand already coming on Thursday, so I think it probably don't really matter or really matter that we have a slightly lower volume on Friday when it's actually reversing. So that's why I think the market breadth is actually very meaningful when we see that there is a spike from the minus 1600 to about minus 160. So that is a huge improvement in terms of the market breadth. So not so much about the magnitude on Friday's rally, because if I hover it here, so this is S&P 500, it's at plus 2.3%. So this is really like nothing. So unlike this bar got 3%. So compare it to the Dow bar, I think the plus 2 point something percent is really not that much. But if you look at the market breadth, it certainly is quite impressive, because almost like pretty much more than thousands of the stocks actually participating the reversal on Friday. All right. So what actually different this time? So if this is sort of the same market breadth, got a spike from minus 1,500, all the way back to about minus 100, almost close to neutral, close to the zero level. Could we expect this kind of the rally? Something like this? Okay. So I think there is something that is different this time. So first, this is actually a selling climax. Okay. But here, I don't really think this is kind of climatic. So it's not that climatic enough from the price action point of view. So unlike this sort of the sharp sell off, so this is really a climatic down move. But this sort of the down move is sort of having a bit of the shortening of the thrust to the downside, especially if you look at probably this bar maybe from here, okay, to maybe here. So shortening of the downward thrust. So unlike this kind of the selling climax that we saw in the 24th of January, so this is not really that climatic. And in terms of the volume, so the volume is high, it's definitely higher than before, but it's not really climatic as this sort of the volume signature that we see in the selling climax in January. So I think this is the major difference. So I think until we see kind of the climatic action similar to this kind of the movement, we still need to wait for the selling climax for the S&P 500. So coupled with the volume and also the price action, and also bear in mind that this is kind of a breaking down structure. So we are just have this sign of weakness. So what's the next phase? The next phase, or the next event, is actually waiting for another LPSY, so last point of the supply. So since the UTED, the upthrust after distribution happened right at probably just before April, so the end of the March rally from here to the top created an upthrust after distribution. So that's kind of still pending and to be confirmed. But if this is a true upthrust after distribution, then all this rally, like there's a rally, and here we come another rally. It's sort of with a very weak rally and very low quality type of the rally. So we did not really get a very strong bounce. So this is kind of flat, and this is maybe slightly better when it's hit the support. So slightly better, but hit the support, but still is still very weak. So we didn't really get this sort of the rally, or even this sort of the rally, or this sort of the rally. So this rally after the UTED, the upthrust after distribution, is very weak. Stan just say, would you say the distribution has completed? Well, okay, so for the distribution to be completed, or for this redistribution to be completed, we are at sign of weakness, and we need to see the final test, maybe the LPSY2, somewhere around here. This is what I'm anticipating. When this turn, like showing this kind of the reversal, and eventually just break down, then this should be the confirmation bar here. Then we can safely say that, well, the redistribution is completed. But From the price structure at the moment, this looks like a U-test, so it's probably still in that's phase D. Phase D until here, then maybe if we break here, maybe this is the first confirmation. That is the second confirmation. So the first confirmation is actually the reversal bar. The second confirmation will be this breakdown bar. Then you can safely say, well, this is a redistribution has been completed and now is going to mark down. So this is how I am looking at it right now. So based on the characteristics of the downswing at the moment, rally is very weak. Downswing is kind of impulsive movement. So that really qualifies as a sign of weakness. So at the moment, it just short term bump into the oversold condition. So there's an oversold condition hitting the down channel. And I think it makes a lot of sense to have this kind of the rally. So the immediate resistance is here, or maybe I'll say here. So the pink color, the red color. So this bar is kind of the commitment bar to the downside. I think it's the most important bar to the downside. So first, you need to overcome 4050 followed by 41. And while the 41 is actually kind of coincides with the supply line of the channel, so plus the horizontal line. And yeah, so I think that actually form quite a confluence of the resistance. So first level is definitely 4050 and then followed by 41. So if it just shows some kind of rejection, have a reversal bar, then likely it's going to go down. And probably from this point onwards, when it breaks, then we can expect some sort of the capitulations from the institution. So right now, based on the volume and also the price action, I think there's certainly a lot of the selling from the institutions already. So there's no doubt on that. So when it's showing some form of the relief rally, relief rebound from the oversold condition, it makes quite a lot of sense for them to sell into strength as well, if not to add in the short as well. So the invalidation level, okay, that's a good point. Okay, so this is where I actually assume that we are going to see a relief rally rather than a change of character, or rather than a meaningful rally like this sort of the rally. Okay, so in case the rebound is really that strong, we need to see it actually violate the level. First is definitely to break above this down channel like 4150. So ideally, it's probably going to test 4200. So then this qualify as a change of character. So that means that this is not a relief rally just like the previous relief rally like this, very weak. So that should be the largest rally that we have ever seen out from this downtrend. Okay, so when we compare the magnitude, like if we really expect a change of character, so similar to this, then we need to see it as the largest up wave up. So largest up wave going up. So I think if probably makes sense to hit somewhere around 42, then that really qualifies that. So if that happened, then we wouldn't really see the immediate sell off, like the capitulation, like I just mentioned, rejection from 41 or 4050, then reversal, and then keep going down maybe to test 36 or even lower, just like 2008, very sharp and fierce of selling. So if we get this kind of the strong rebound, then at least I think kind of get into the struggle mode. So something like this could happen. So we can expect a trading range from here. So if we really get this sort of a rebound, then I guess we can safely bet on a trading range will form from here on, similar to the previous trading range. And then we need to justify whether there will be more selling at the later stage of this trading range. So in short, probably I think 4150 is the level that you need to watch closely. So if you just break out and then have a quite a significant commitment, 4200 or even 43, then likely that is a change of character. It won't really go down that fast, it will just form a trading range. So at the moment, if we just expect a relief rally, this sort of the magnitude, then probably 4050 and at best 4100 is the immediate resistance level to sell into the strength or just initiate short position.